Well, hello folks, I'm LA Little and this is your daily Neo-TA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube under the channel LA Little. You can check it out there. Shows are usually up about 15 minutes after this one is done. As far as these markets, well, 2 days running now, the markets have given us signals that they were going to try to bounce. In 2 days running, they have tried to bounce, but they failed each time. When that happens, you have to step back and you have to ask yourselves, okay, am I wrong or are the markets wrong? And you know the answer to that question is usually me, not the markets. So you have to just kind of step back and say, okay, they're not doing what I think they should do. I don't know why they're not doing what they should do, and I'm going to have to change my outlook as a result. If you look at the numbers, down 0.5% here on the industrials, on the composite the same, a little bit more on the S&P. Once again, the Russell outperforms, but again, you know, big numbers all the way down. Each and every one of them trades lower. That's not a good sign. We actually had the bonds trade up again, so they're still up in that top end of that range. Silver trades down, gold trades up. That's a fear trade, so silver's more tied to the industrial activity. And as the rest of the market gets hit, and in particular if we look at the XLB later, you'll see a huge reversal in it. I think that was what was at work there. Dollar was up a little bit more again, and this morning we had the ECB, the Bank of England, neither one of them changing anything about their policies. Draghi's press conference kind of downbeat, you know, things are bad. Yeah, we know they're bad. These LTR, you know, these targeted LTROs are going to really do something, but we're probably going to do QE. And that mortgage-backed security stuff really is just like he used to tell us how he had plenty of tools in his tool chest. He's still telling us that, but he's not doing anything. But he really stressed it. From what I read, the transcripts I read, he really stressed it. So, you know, it looks like that's the way they're going, but right now it doesn't matter. The headlines are negative. The headlines are driving this market. Tonight you got the flare up in Iraq starting to take place, where the ISIL is moving in on the Kurdistan territory. So they're moving to the north now. You still got the peace truce that's in Israel and the Hamas. Looks like it may crack again tomorrow. It was only through Friday, I believe, and so far from the headlines I've seen, they haven't worked it out. And then of course you got the big Ukrainian problem. Ukraine keeps pushing against the rebels in the east, and Russia pushes back on the sanctions by banning all food products from not only the United States and Europe, but a number of other countries, Canada included. So the trade wars are getting started, and that typically is not good for the market, and that is part of what's going on here. So let's pop into these charts and try to make sense of them. The main thing, or the main takeaway here tonight, is that they're not doing what we think they should do, and because of that we kind of have to change the way we're looking at this market. So starting with the S&P 500 here, let's pop it up. Okay, so the S&P, and let me just go over why those signals were there and the ones that failed. You know, a test of the Friday low took place here on Tuesday. Gets under it, back over it, volume on the Friday low, volume here. I guess I'm drawing those a little too small. Let's get rid of that. But the volume on the Friday bar, which was here, and the volume on the Tuesday bar, less volume, right? That should lead to a bounce. It tried. You can see it tried to go higher, tested again, also closes over it, volume about the same, again less volume, 2 days running, should bounce. Tries to bounce, but fails. Volume still lighter, but it's underneath those lows now. It has failed now. And as part of doing that now, it has set up a bearish ABCD structure. Now I do conservative numbers. If you do the full one, like most people you'll see will do it from here. You know, they'll do this whole number instead of what I do. But I always like the more conservative numbers to project with. And if I do that projection, it comes down to about 1876. That's into this bar. That bar is a swing point low, both here on the daily and on the weekly. We haven't seen one of those break for, oh my gosh, 2 years, year and a half, a long time. So we've got a structure now that will take us into this bar, and I suspect if we get down into this area, it is going to find support down there, especially if it comes straight away, which is what it's doing. So if you just keep climbing or falling and you get down into here without any kind of a bounce, right, then more than likely it will find some support here and get some sort of a bounce. Of course, if you do that, right, then the whole picture starts to change, and I just want to kind of walk you through what that would look like. On the weekly chart, if it comes all the way down to that area, right, and then bounces, assuming you get a couple weeks of bounce, that's going to set up potentially an ABCD structure on the weekly. That's going to take you not only past that daily potentially, right, if it breaks, but take you probably into the next set of lows. And you can see how that gets fairly problematic. That price point gets you down to 1810. Now 1810, if I pull over the monthly, 1810, this one's going to print this month, 1737. 1810 still 80 points away, so that's still another 4.5%, 5%. But now you're starting to work your way back the other way. And for those people who like the classical TA, I am sure they all have their charts drawn like this and they're watching this. If you start to break this, they're going to get worried. Because that's what everybody looks at. They look at trend lines. So the problem, as I see it, is really not what's happening right now, but what could be setting up, because you can't get a huge push lower until you break on multiple swing points. It always seems to work that way. This one can take us down and get us close enough, and then if we break, we're going to break multiples. And so that is the danger of what's happening. Now, to alleviate this, and the next chart we go to will give us that that scenario. But to alleviate this, this could just play around up here for a while. In other words, just bounce around. But the structure would still be the same unless we can get back above these retest regenerate zones. And so far, every one of them, not only here but in the sectors, has held. And what I mean is that's a bearish break, right? Swing point low here. You break it, you come back up, you try to get over the top of it, and you fell. That's the retest and the regenerate to the direction of the break, which in this case is bearish, downside. And then what does it do? Starts to regenerate. That's exactly what this thing looks at. That's why we watch these retest regenerate zones. They become very important. And that is what happened here. And it missed it by 1 point. I mean, that's about as close as you can get. Now, 3 days later, you find yourself 30 points lower and wondering if it's going to lift. And at this point, you're starting to put a lot of people underwater. You got 2 months of folks underwater now. And if we get down to here, let me go back to the weekly. If we get down into this price point, you can see everyone since March will either be even or underwater almost. And that's a pretty big span, right? That's 5 months of folks. So that's the danger of what's happening here and how it's starting to set up. Didn't want to go to that. I want to go back now to the more positive side of things. And that is that we still have divergence with the NASDAQ, the NDX, and the Russell. And what I mean by that is none of these have broken yet. And in fact, today, that low, Friday's low, was 43.24. We get up underneath it, 43.21. We close over it. So we test fail to go lower. Test failures can set up bounces, should set up bounces. This should bounce. If it doesn't, it's just one more signal of something larger taking place here, and we'll get that answer tomorrow more than likely. NDX set up the same way. Exact same scenario, goes down, test that low, can't break it. Russell hasn't even gotten to that low. Remember, the Russell has been the strongest the last 4 bars. This one's actually trying to push up, pushes up again, doesn't have as much volume, fails. And folks, just as I was talking a second ago, one more time, this has failed to break out of that retest, regenerate down. In other words, it hasn't been able to get over that high of the swing point low that was broken. That is trying to regenerate to the downside. Russell regenerates to the downside. It will have set up an ABCD structure, not nearly as bad, but that will take it almost to the lows. Same sort of scenario setting up here. But they have to break first, and so far they haven't broken. So index-wise, markets trying to find a bounce, 2 days running, fail. That tells us something, more than likely something larger is happening. And you know, it's geopolitical, but you know, technical analysis takes into account everything. It's not just economics, it's not just earnings. It's also geopolitical, it's also a lot of other things. Everything that affects a stock gets reflected in the charts. And so, you know, it's hard to trade something when it's political like this, but it puts pressure on the markets and you just have to respect it. So that's the indexes. I want to pop over in the introduction time here that I have remaining and focus just a minute on the world markets, because that's where all the action is. And I want to go straight to Europe, since that's the biggest problem right now. Last night, if you remember, France tried to break down, couldn't break down, was going to bounce again. So it gets under it, back over it, less volume, that's a bounce, and it was a doji, almost a little hammer. But what happens today? They just blow it all away again. Extremely weak. FTSE, remember, it left more low, it went under, back over, but left more volume. That one's going after the lows. And then curveball is DAX. DAX actually gets under yesterday's low, 90.30, gets to 90.25, has slightly less volume, and closes back over. So you know, that when you read that is actually a positive. But just like we've seen elsewhere, I don't know if that's going to hold or not. And as a matter of fact, if you look at Germany, it's broken, it's extended 1 bar. We've always said 2 to 3 bars. 1 is in the books, 2 is probably coming. So no relief there. So when I look at the world markets, in particular Europe, they still look problematic. If I pop over to Asia, and I'll start with China, the 8 shares that trade on Hong Kong exchange, inside bar doesn't really tell us anything. It did have a hammer reversal yesterday. A hammer reversal, you know, the key to that is you don't trade underneath that low of the hammer. Well, it's almost there. If we trade very much lower tonight, it's going to get under it and pretty much invalidate the reversal. So that one actually needs to open where it is or higher and keep going. Hong Kong doesn't do it, gets underneath it. Also had a hammer reversal, gets underneath it, volume slightly heavier last night. That one looks like it wants to come lower, which makes me think that China 8 shares are going to do the same. The Nikkei actually tested was trying to bounce off of this bar. What was it, the June 19th bar? No, it was this bar. Hang on, let me get the lows here. 138. Yeah, it was that bar. It was the June 19th bar. So it gets underneath it, slightly over it. Looked like it should try to bounce. Same thing again today. Gets underneath it, back over it. Although today's volume is a little heavier than yesterday's volume, it's still wider than that bar. Again, should try to bounce. If these things do not bounce, right, again, now world markets would be telling us something, just as we saw in the two hammer reversals, already telling us something. So in summation, and I could go through a few others, but in general, the technical setups, we watch them not just to see what they do, but to project what they should do. The reason we do the should part is so that we have something to measure against. If they don't do what they should do, that's a message to us. And right now that message is loud and clear. These markets are weaker than they look, and there's no high probability in these technical structures actually playing out at this particular time. And this, if you've watched me long enough, you know this happens. It happens from time to time. It's happening right now. When that happens, you have to back off and quit trying to read the technicals as closely and make trades on them, right? And just kind of sit back and let it play out and try not to get hurt. I mean, that's really what you're doing. As I wrote in the trading room this evening or this afternoon, I said something to the effect that there are times that you try to make money and there are times that you try to not lose it. And we've switched from the trying to make it to the trying to not lose it as these signals fire, yet they don't get fulfilled. Because when that happens, you can't trust them that much until they get back in kilter, or until our reading of them gets back in kilter. And right now, I don't see that I'm reading them wrong as much as they're not doing what they should do, and that tells me to get careful. So that's the summation. As far as what's going to happen tomorrow, I don't know. It looks to me like it's going to go lower, but at this point I'm not betting on it, and I'm not putting money on the trades. So that's kind of the wrap. Let's dive a little bit deeper. I've got a couple questions emailed and texted to me. If you have a question, you want to shoot it to me, you can do that. The number, text number 303-912-9110. If you've got a email or you want to email me, you can do that easily. Just shoot it to support@tatoday.com. We'll pick it up there. Let's go to these questions so I don't miss them tonight, because I did actually miss a couple last night. They got shot to me and I didn't pick them up. So one of them is AMD. So let me pop these into, I got about 3 of them here. Let me pop them into a watch list so that I can pull them up and see the time frames, all 3 time frames. So AMD, of course, is the chip maker, competitor to Intel, and let me pop up the chart. So they reported earnings and got slaughtered from what I remember. Yeah, here's that big gap down. And the question was, is it bullish? No, it's not. This is just a rally. Let me look at the weekly here. Yeah, AMD. Look, this is crazy. Look at how this chart lines up. Every big push is to the downside, and they're huge, wide price spread bars, and then they come all the way back up. Now, I would suggest to you that when you see this kind of action, right, over and over, and then you see this kind of action, right, when it comes right back, you know, like this, what does one expect this one to do? Yeah, come right back up there, right? Well, you have to remember this market was extremely bullish this entire period up to here, and then it got bullish again from here to here, right up to there. So a lot of this type of action is a result of a market that's bullish, not a stock that's bullish, because a rising tide lifts most all boats. This boat got lifted by that. No, I wouldn't view this as bullish. I would view it as something I'd stay away from. The only way I would trade this is to wait until it came back and buy that zone right there. That's the only place I'd buy it. Why? Because I don't have to put much risk on it. And then if it really does come all the way back up to here, I've got a pretty good reward. My risk to reward is huge, right? And then that's tradable. Outside of that, I wouldn't mess with it. I think it's just a problem. You know, you're asking for a problem to buy this, especially now after this big move. So no, I don't like that one. Another one, Rite Aid. So Rite Aid, this was a stock that members and I were in for quite a while. We made a lot of money on it way up. I don't remember exactly where we bought it, but we had a nice big run in it. And then they reported some bad earnings. They got hit. They got hit again, it looks like. I'm assuming this was earnings again. I haven't seen it. I haven't seen that it was earnings, but I assume that's what it was. This is not a stock I would touch either. So it is coming back into support zones. So I assume that's what you're looking at. So this low, 583, 599. So it goes under, back over. Yeah, you could make some money on it, but I mean, where's your target? It would be my question, right? Is your target here? Is that what you're trying to do? Catch a little small bounce? Or are you really thinking it's coming all the way back up or something? The stock's broken right now, and broken stocks are like broken clocks. They don't work. This low would be, you know, once it finally makes it up there, this low is going to be like almost impossible to get over because it's going to be way after 6 bars. And anything that comes back after 6 bars has an extremely high probability of going back the direction it was going. So that at most would be your target. Of course, that's a pretty good run if it were to do 90 cents on the way back up, but I don't know that it will. Let me look at that weekly one more time. Yeah, you have to put, if you're going to buy this thing and try to trade it to the top side, your stop has to be right in here somewhere. I mean, you can't give it any more than that. You've got to give it probably that much, which is the bottom of this bar. That bar is the December 9th on the weekly. That's 546. So you give it like 540 or something. You're at 6 now, so you're giving it 60 cents. You're going to lose 10% on it if it does that. Your upside, so that's 60 cents that direction. Your upside, you know, is 90, or, you know, well, it's not 90 because I've got the things drawn in wrong. It's up here where that low is 95, right? Yeah, so it's about 90. So 60 cents down, 90 cents up, 1.5. I still probably wouldn't play it. Okay, so that's that one. Let's go to the next one. ALLL, which is Allstate. And Allstate's been a pretty bullish stock. Allstate just fell though. It went over, back under, right at the highs, off. I believe this was earnings because it did show up in my earnings sheet. It got over 3 swing point highs yesterday, right? And that usually is a pretty good setup. So you're breaking multiple swing point highs. This got pulled back in probably by, you know, the action today in the general markets. The problem is unless these general markets turn around, and like I was saying at the beginning of the show, right now they don't look like they want to. You know, they're just not observing the technical signals. And so given that, you know, it looks to me like this one's going to trade back in, probably into this area. So I would be looking at this low as kind of the target of where Actually, it's this low, right? Yeah, that's the low, because this high volume bar goes with this low. Let me make sure. Yeah, it is. So that's 58.52. Let me see what the weekly looks like. Yeah, if you're trading this intermediate term time frame, you'll probably be okay even if you're buying it up here, because you're thinking longer term. On an intermediate term time frame, the charts have it drawn out perfectly, and that is this area is the support zone. So, you know, it can trade back to here and be just fine. As a matter of fact, it could actually probably trade back to the bottom of this and be fine. So, you know, if you're trading an intermediate term time frame, you have to give it that much room at least. But on a short term time frame, I'm not sure this is the spot. Matter of fact, I'm pretty sure it's not. You may, if you get a shot tomorrow to get out, you know, it might be the place to get out, because, you know, right now it's about not losing your money, in my opinion. So that would be the way I would be looking at. Oh, okay. So it looks like I looked at the wrong stock. Thanks. I put it in and I got a thing back. So let me try another one here. So a double L instead of yeah, Allstate. That's the one I'm looking at. I believe I did it right. Not, oh, you want AAL. Let's see what AAL is. This is American Airlines, isn't it? So my bad. Let's look at this one right quick. Nothing like getting prompted live on the show, right? So you bought American Airlines. Okay. Hang on, let me throw it in so I can get AAL. Alright, so I can get it on the weekly too. So American Airlines. Yeah, I don't see anything on a weekly. So it breaks. Yeah, I don't know, man. This one broke multiple swing point lows, right? You're breaking 4 of them. That's pretty ugly. I can't touch a stock that does that. And this is doing just like the markets. It's building out down here and looks like it's going to go lower, and you got an ABCD structure to the downside. So this is another one I just probably couldn't do anything with right now. You know, this looks like an ABCD structure to the downside. You've broke multiple swing point lows. It's tested back into it twice now. It doesn't have the volume coming back into it. I think this is danger zone on these stocks. So I can't really recommend that. And I don't see, you know, I think you could drift back into this bar pretty easy. So 34.20, 33.05. You know, the caveat here to everything right now is that the market's not observing the signals the last 2 days. If that's going to continue, you know, this market wants to go lower. And if it goes lower, it's going to pull everything with it. And that's the danger right now. When I say, you know, there's times to try to make it, times to try to save it. That's what I'm talking about. And right now, I think the biggest thing one can do is try to stay out of trouble and just pull in your horns a little bit until this market settles down and we find out what it's going to do. Okay, well, I've run out of time. I think tomorrow's going to be a rough day. You got a lot of geopolitical, you got a weekend coming up, you got summer trading, there's no volumes, and you've got a market that's not bouncing when it should bounce, and that's a bad sign. So be careful. Be careful out there. Have yourself a great one. I'll see you, if you're a member, of course, I'll see you tomorrow. If not, I'll see you Sunday night. Have a great night. Take care. Good night, folks.